Hello guys, this is FX Trading Academy and welcome once again to my YouTube channel where we do top-down analysis of different financial securities using pure price action trading strategy. And today we're going to be looking at a Forex currency pair GBPAUD, which simply stands for the Great British Pound paired against the Australian dollar. So without wasting much time, let's get started. So, like you all know, I do my top-down analysis by starting my analysis from the monthly time frame. And currently on my chart, I'm on the monthly time frame. So on the monthly time frame, what we try to achieve is to get our directional bias, where we go down to the weekly time frame, where we can look for a structure of the market or a chart pattern to work with. The daily time frame is what I call the tradable time frame, because there we can get the most recent trend or range of the market. And then on the 4-hour time frame, I start looking for my entries. On 1-hour time frame, we refine the entry and then actually take our trades. So let's put this to practice by taking it one step at a time. So on the monthly time frame, if we were to look at the most recent happening on this particular time frame, so even if we were to go back a bit, can see that the market came all the way down here, made a lower high, as the case may be, but came back to make a higher low, then a lower high, and the market sort of didn't have like a clear direction within this place. But just most recently, we can see that GBPAUD has been making strides in the upwards direction. So what does that mean? It means that my directional bias would be in the upward direction. What that means is that GBPAUD is currently bullish. So if I'm to zoom this in, we can see that the market has been making a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, currently retraced into a major what support zone. So where do we think GBPAUD is going to? We think the next destination will be this particular resistance zone. So that does it for our directional bias. We'll be looking to get buying opportunity in this particular market, because for quite some time now it's been in an uptrend. So the next thing would be to go to the weekly time frame. Now on the weekly time frame, what we try to achieve here is to look for a possible chart pattern presented by the market that which we can work with. First, for starters, there are certain things to notice on this particular time frame. First, we can see that the market is currently on a very, very strong support zone. Now, why do I say this is a very strong support zone? We can see that if I'm to zoom this in, you can see that the support zone goes way back. If I look at this place, this is 2016. So we're having support zone supported the zone acting as a resistance way back as far back as 2016, and we're in 2025. So this is a major support zone. So that's also would back our initial take that we'll be looking towards for buying opportunities. Of course, we know we buy from support and we sell from resistance. Now, another thing that we can note if we go to the line graph would be that we have a possible double bottom, and a double bottom is a bullish reversal chart pattern. One good thing that this particular bottom has done is that it had already succeeded in grabbing liquidity by shifting just a little bit below the zone, but did not close beneath it. And if we go back to the candlestick chart, can see that buyers are already present in the market trying to push it upwards. Of course, we know that the simple rule for trading double bottom remains, and I'm sort of not tired of explaining it to us. Once we have a double bottom, we wait for price to break the neckline, wait for price to come back to this neckline, and then we can get to start looking forward our buying opportunity. In this case, the neckline would be this level. And like I always try to make us understand, the fact that this is a textbook explanation doesn't mean that price will always stop here and go upwards. So most times price can come into this area and then grab a lot of liquidity before heading in the upwards direction. However, because our price is currently on a very strong support zone, we might be able to get buying opportunities on this support zone before the break of even the double bottom. So the double bottom is simply giving us more confidence that the market is ready to head upwards. Another thing to note is that we have like the market in a mini range. Now, how do I mean? If I'm to bring in this tool and look at this particular area, this gives us um, a mini resistance zone. Now I call it a mini resistance zone because I like drawing my major zones on the monthly time frame. And if we were to zoom in, we can see that this, if we were to draw this out, so let me use this horizontal line, and see that it doesn't really have like historical backing. So I call it like a mini zone. Albeit calling it mini doesn't mean it's not a strong zone, because we are on the weekly time frame. And of course, we know that each candle on the weekly time frame takes a whole week to form. So this means that every week that the price had gotten to this particular resistance zone, price has been rejected and pushed backwards. So we have like a mini range between a mini resistance zone and a major support zone. So I'm doing this to say that even if we have like a double bottom here and we have buyers already coming into the market, our first destination would be this particular area here, because for so many weeks price has been rejected once it got to this area. So now we have our chart pattern to work with. We have our directional bias. The next thing to do would be to probably add the major tools I like using in my analysis. I already have my support and resistance zones. Then I can just add my simple trend line. So now we can see that even on the trend line, the market has made one touch, the second touch, and this is critically the third touch of this particular trend line. And we know that for those of us that use trend line a lot, the third touch does the trick. So having these tools ready, somebody will say, what about my Fibonacci retracement tool? I can add that as well just by drawing it from this touch of the trend line to this zone. And wow, you can see that the price still aligns with my Fib golden zone, which is the zone between the price is currently within my Fibonacci retracement golden zone, which is the zone between the 0.618 and 0.5 zone. So everything is set for me to start looking for buying opportunities in this particular market. So having this confluence set, the next thing I have to do will be to go to the daily time frame, which I call the tradable time frame, because this is where I look at the most recent trend or most recent happening in the market to start looking for my entries in the much lower time frame. So to make my chart less cumbersome, these guys have done their work. They've already told me what to look at from the market. I can remove the Fib tool, and of course I can remove this zone because it's already telling me in conjunction with the major support zone, that this is a strong area to look for trade from. Another very important thing to see on this daily time frame is some of the candlestick pattern, or some of the candlesticks that are present here. So we can see like the market has been coming downwards with good momentum, but you can see very strong two-legged long leg doji candles, 1, 2. These are um, bullish reversal candlestick patterns, or bullish reversal candlesticks. So giving me more confidence again that this market is ready to move upwards. So with this confidence, the question now arises, how do we take advantage of this beautiful setup? Now we know that our first point of call will be this destination. So if price is able to get here, if it finally succeeds in breaking above this mini resistance zone, then we'll expect a pullback, maybe probably into the zone, and then we'll go upwards. So first of all, how do we take advantage of what we have before us? Now, it is very easy to do so. The next best thing would be to go towards the entry time frame, which starts from my H4 time frame. And we can see the beautiful setup that we already have. Now, I preach a lot about using counter trend line. If I'm just to impute a counter trend line here, we can see that the counter trend line has not just been broken, it has been broken and retested. Everything here is telling us that this market is going to rally upwards. Now, our counter trend line has been broken and retested. So if we're lucky to analyze this trade earlier, all we simply needed to have done would have been to put here and take our trade here with our stop loss underneath this area. And if I go again to the line chart, at the point of entry, we have what? A very, very strong double bottom here, which is a bullish reversal chart pattern. So, of course, just like I explained earlier, this will be the neckline of the bottom. Immediately it breaks, price returned back to it, would have simply entered had our first entry here. But even after missing out on this, we can see that the market has changed character completely in the sense that it was coming downwards, making lower lows and lower highs. And all of a sudden, now it started making what? Higher highs and higher lows. And currently, the beautiful thing about this entry time frame is that price just made retracement back to the major support zone. So this right here is perfect time to enter the trade. So if you get to come across this at this moment in time, I would advise that you hop into this trade. Your stop loss would be here. It will be quite big because we're aiming for what? Very, very massive risk to reward. So this is a situation whereby you're using about 50 pips stop loss to get how many pips? Almost 500 pips in profit. And if I go down to the refinement time frame, which is the H1 time frame, we can even refine our trade further in the sense that we can still push our stop loss up a bit just underneath this area, where we can even see that on the H1 time frame, the price has formed like a double bottom again, and we can see price already moving upward. So if I'm to take this in, we have how many pips? So we're using 42 pips to get almost 500. So if your psychological game is strong, you can hop into the trade quickly, have your stop loss. You can even give your stop loss a little breathing space to be about 50 pips to get 500 pips. And I tell you, if you're able to hold this trade, you'll be in massive, massive, massive profit. This simply means that even with a lot size of 0.1, if you enter this trade with lot size of 0.1 and you are able to hold it to play out, then you'll be making $500 from this trade. So this is my outlook on GBPAUD. This is a very, very viable trade. And the truth is, I already entered this trade earlier and I shared the signal in my free Telegram signal group. And if you're interested, I'm going to be adding the link to the Telegram channel to this particular video, so you can hop in. It's free, so it's not a channel where I bombard people with different trading. So I take our time to look for those trading opportunities. Sometimes we get to take 2, 3, 4 trades in a whole week, and the testimony has been good thus far. So like I said, this is my outlook on GBPAUD. GBPAUD is going to be rallying upwards, and it's going to be doing so for a very, very long time. So if you've gotten anything from this particular video, it is only fair that you click on the like button and be generous enough to share the video with others to gain from it as well. And if this is the first time of coming across this channel, you can subscribe and turn on your notification for subsequent videos like this. Like I said, this is what we do: top-down analysis of different financial securities, from crypto to currency pair, and even the derived synthetic indices, as well as commodities. So thank you once again for watching the video to the end. Thanks for supporting this channel, and have a wonderful trading day as you hop into this particular market. Cheers.